Hi, this is Jim Pierce, Chief Investment Strategist for Personal Finance, with a video update on Friday, June 2nd, 2023. If you don't think Wall Street was worried that an agreement to the federal debt ceiling negotiations might not happen, consider the stock market's behavior today after the Senate approved the bill last night. The large cap S&P 500 index is up about 1% today. In fact, as you can see on my screen here, up about almost 1.4% a little after 2 o'clock today. Even more telling, I think, is small cap stocks, because they're the ones that tend to get hurt the worst when the economy goes into recession. Russell 2000 up, over 3% today. And if you look way over here on the right, you can see, by the way, over here on the left, earlier in the year, before the collapse of Silicon Valley Bank, small cap stocks were doing pretty well. But after that happened, they really tanked. And now I'm going to go just look at the last month so you can get full scope. But you can see today took a noticeable upward turn. You can also see it in some individual companies. For example, Caterpillar is a company I just read about recently in personal finance. And today it's up about 8%. And again, this is a company who gets a disproportionate amount of income from the infrastructure bill that was signed like a year and a half ago. There was a genuine concern that if the Fed was never going to default on its, the federal government, that it was never going to default on its treasury debt, but it might default on bills, for example, coming out of this infrastructure bill. So Caterpillar jumped up more than $16 today, and that's a very telling sign. Also, consider PF Income portfolio holding Office Properties Income Inc. Now that's a real estate investment trust that derives, I think, roughly about 30% of, that's the wrong symbol, but derives about 30% of its revenue, or maybe a little over 30, from government entities. And today it's up, you can see right here, a little under 9%, which also suggests that had the federal debt ceiling limit not been raised, perhaps some of their tenants might not have had to pay the bills, and in response to that, maybe OPI would have had to temporarily cut its dividends. So clearly there's some relief on Wall Street, and it's showing in some of these businesses that derive a meaningful amount of revenue from the federal government. So there's your proof right there. Wall Street may have said it, really wasn't too concerned, but just the movements in those two stocks tells me that there was some genuine concern. So with that out of the way, this morning's jobs report for May will once again turn Wall Street's focus to next week's meeting of the Federal Open Market Committee. Last month, the U.S. economy added 339,000 new non-farm payroll jobs to the economy, which is way above the estimate of 195,000 from the economists on Wall Street. But at the same time, the unemployment rate rose to 3.7%, which is its highest reading since last October. In this chart here on the left, you can see the little blip upward for May. And again, you got to go all the way back out here to October to last time it was that high. And it actually had dropped down to 3.4% last month. So conflicting data points somewhat. Yes, the economy is adding jobs, but at the same time, the employment rate is going up, which may give Jerome Powell some room to pause the constant rise in interest rates that have been going on for the past year. The expectation on Wall Street is that the FOMC will not raise interest rates when it meets next week, and it may take no action at all to see if inflation can slow down on its own now that interest rates are higher than they've been since the onset of the Great Recession 15 years ago. So just like that, the soft landing scenario for the economy is back in play. To be sure, we still have a long way to go before declaring victory in the war against inflation, but the developments over the past 24 hours improve the odds of bringing inflation under control without sending the economy into a deep recession, and that is some good news. So that's this week's PF video update, and I look forward to talking to you again next week. Thank you.